welcome to another episode of Market Breadth. Last time we saw the candlestick one. Now we're going to have a quick look at what we can possibly do with point and figure. Okay, there is a simple logic that the team Define Edge has created, which is in point and figure, a double top buy above moving average is bullish setup, double bottom sell below moving average is bearish setup, and if there is a double top buy and if it's in column of O, then it's neutral, double bottom sell, and if it's in column of X, it is neutral. So basically, we are going to look at the only stocks that are in double top buy above moving average as bullish, double bottom sell below moving average as bearish, right? Simple thing, and we can do A divided by B and try and get a number out of it, and then keep a trend and then track them here on. Right. So let's get started. And how are we going to do that? Is we're going to come to price scanner, point and figure scanner. Okay. We are going to come to popular, and where there is uh, double top buy above moving average here, right? You keep it running, and for this example I will keep FNO stocks so that we can do that on daily point 0.5. I'm not going to change anything, and I'm going to scan. Similarly, I'm going to open another R zone where I'm going to run double bottom sell below moving average. It's taking some time, but you got the funda, right? The funda is very simple. You'll need to get the count of double top buy above moving average and in column of X that is running and above moving average, which is bullish setup, and double bottom sell below moving average, which is bearish setup, right? For some reason, this is not loading. Let me give it a try. Right, when we're looking at double top by above moving average, these are all. If you look at it, I can just open it and quickly go through some examples. See, this is above moving average, and this is in currently in double top buy without the column of O's that are not yet printed, right? So this is a bullish setup. This is exactly what you will see across. Eicher Motors also will be very similar. The moving average is here, double top buy, and has happened, which is also given as a triple top buy. So Eicher Motors is looking very, very good. Hind Petro, any chart that I open, you will pretty much see similar things, but the last column might be stretched or whatever it is, right? It's double top buy above moving average. That is what we are going to see, right? See this. It's a nice breakout here, right? Indian Bank is looking bullish, and then L&T, right? It's a nice anchor column breakout, and it's a double top buy above moving average. And there is a lot of consolidation that has happened here, so L&T looks very good, in fact, right? And the last one for this is Maruti. It's a nice anchor column sitting, and there's subsequent double top buys. So there are six in this. This has not loaded, but it's fine. Let me try and do double bottom sell below moving average. So remember the count here, it is six, right? And let me do this scan as well. Here, exactly opposite of what we're going to see. The last column is going to be O, and it's going to be a double bottom sell below moving average, right? Which indicates a bearish setup. Now, ABC Capital, everything that you're going to see is pretty much similar. Just that the last column might be longer, shorter, depends on whatever. Angel Broking has now given an AFT, which is a big bearish column, which is of almost 82 O's printed in this column from 28th August to 29th August, 21st August to 29th August. Right, that's obviously a gap down, but yeah, I can randomly pick anything, right? See this. There's a moving average here, and this is a double bottom sell. This is actually a trap. Double bottom sell, double top buy, double bottom sell, right? So this is a trap trading, and you can obviously look at BSC as well. It gave a strong move, but that strong move just got eaten up by this, and now below moving average, it is given one double bottom sell. A follow through will be interesting with this. So if you can see, there's plenty of double bottom cells below moving average. So this is 107. Now, how do you do this? I would take an Excel sheet and I would just go, what are the count of bullish? 6. Count of bearish, 107 is equal to 6 divided by 107, and make that a number, right? Below 1, it is it is bearish because the number of bears are higher than number of bulls, right? So sometimes when you start catching this trend, you will start understanding that, there is a point where you can probably identify an oversold condition using these setups, right? What are the odds if I take this in simple, and if I do 107 divided by 6, for every long there are 18 shorts, right? Either the market is extremely bearish, but sometimes when you draw a pattern, when you draw a trend to this, you will see, like, per long you have 8 or 10 shorts, and that's indicating an overstretched or oversold position. But it can happen, right? It can happen reverse as well. In a really strong greed bull market, you can see 107 bulls and only 6 bears, right? In that case, for every bear there are 18 bulls, right? So sometimes you can not sometimes, there is a method that I have developed, which I closely follow, and I'm able to identify probable top of the market, like where the greed is extending to, and so on, right? Where there is a method that I use to try and see what is when there can be a possible reversal, and so on. But the concept is good. It is very objective, and it is on the core properties of point and figure, which is the column of X and O's, and you have a double top buy, and from there on you have a simple moving average, that is 10 period moving average. The basic condition is it should be bullish above moving average, and it should be bearish below moving average for a bearish setup. Basis that logic, they've already created it on popular, so you don't really need to go create anything. You just need to come to popular and say DTB above moving average and DBS below moving average. Keep the count of this, and then divide A divided by B, bull divided by bear, and keep that trend, right? Count the number of bulls, count the number of bears, and do bull divided by bear. You will probably get what we are looking at, right? Very simple, but extremely powerful. If you follow it for close to 3 months to 4 months, I am sure you will be able to try and understand, okay, what is the trend? When does kind of markets go to extreme situations? For this is obviously going to be short term, right? Long term investors just stay invested, and you don't really need to worry too much about these things. But somebody who is a short term investor, a swing trader, as well as an option or a futures trader, we can sort of try and use these situations to get to probable reversal trading, and identifying maybe the setups that are there. In my case, very simple. I will go to DTB above moving average, and I will see there was AU Bank, there was LT, there was Indian Bank, and all of these banks, right? I will start keeping a close track on them. And if you see, there are two banks, which is AU Bank and Indian Bank, and then there were two auto, which is Eicher Motors and Maruti, and there was LT, and the sixth one I'm forgetting. Let it load. But you can also get the sentiment. The sentiment is probable banks, which can be, you can have a close look at. But auto is also looking good. In auto, you need to keep track of Eicher and Maruti for your futures positions or options positions, or whatever you're looking at, and however you want to play it. And please don't go without putting in at least 3 months of trend. Understand, in simple ways, you can understand standard deviation, and try and plot these line graphs and plot the standard deviation on it. If not, you can try a simple method of, like how there is IV percentile. What is the 90 percentile and the 10 percentile to draw a channel of, higher and lower resistance areas? There are simple things, but I know it's not easy for a lot of us. But just by watching this like a chart, you will be able to try and get to a much better position than what we were looking at, right? The other one was Hind Petro. Yeah, I'm not going to go too detailed into it, and i I'm very, very certain, and I'm very, very positive that this will bring a good change in the way you understand markets. And I'll sign off by saying I wish you guys the very best. Please keep learning, please keep trying, and make a data set of at least 3 to 4 months, and then draw a pattern, and then you will start getting to see, okay, this is the kind of difference that we can learn from or implement or even try and figure out, or some other idea pops up in your head. There are some people who use DSmart, who use Must, who uses Super Trend. You can for DSmart, I know it is there DTB above DSmart, and there is, I think, DTB above Must as well, if I recall it right. Moving average, right? No, there is only DSmart and moving average, right? If you are a Must follower, if you're a Super Trend follower, or if you're anything of this sort, you can try and create one which is very simple, and you can run your own scanners around it, right? And I think it goes without saying, I'm no expert, but if there is anything that I can help you with, please do ping me. I think my credentials are there on the YouTube channel. Please do ping me, and I'm very happy to help in any way I can. And I wish you guys very best. Wish you guys all the very best, and I uh, signing off. Thank you.